organizing this session. It's great also to present after Olivier. And I think these two papers, I mean, they're going to be very, very different, but they are on somewhat related topics. And I'll talk minimally about MID here too. So this, as Alainer was saying, this is joint work with Christian Hilberg, who some of you might know, who's professor of housing economics at the Geography Department of LSE, and also with our PhD student Xiaolun Yu, who is responsible for much of the good stuff that comes out of this paper and none of the bad things. So it was a privilege to work with him in this paper. So let me jump right in. Let me start by stating something that's relatively obvious. So credit availability increases demand in housing markets. Credit markets and housing markets are very tightly linked. And perhaps one of the more obvious reasons is that a large amount of the purchases of housing units that happen each year are performed on credit. In the case of the UK, this is regularly over 50–60% of all purchases of units are done on credit, using mortgage credit, oftentimes large amounts of mortgage credit. Because it is widely known that these two markets are very tightly linked, often government policy targeting housing markets operates through mortgage markets. And we have several examples of that. Perhaps some of the best known examples are the mortgage guarantees provided in the United States by the Federal Housing Agency, which have been studied extensively. In this case, you have a mortgage guarantee that's provided to lenders that supply credit, mortgage credit for low credit score households buying units with high LTV mortgages. You have a similar policy in the Netherlands. You have, of course, mortgage interest deduction that was discussed now by Olivier quite extensively, which exists in the US and in some continental European countries, although some of the countries rolled it back in the last decades. And then we have some policies that directly provide government loans to households for the purchase of properties. We have policies like that in the UK and Ireland. In both cases, it's called Help to Buy, and I'm going to be talking about one of these policies today. I believe there's a similar policy there's a policy at least that bears some resemblance to this one in France. It's the PTZ policy. These policies are going to have impacts on several things. They are going to be affecting tenure choice. This is largely what governments want with these policies. It's often the case that governments the explicit intention of these policies is to promote access to home ownership, but they're going to have, insofar as they affect housing demand, they're going to also affect housing affordability or housing prices, and they might affect housing supply. So in this paper, we're going to try to estimate or give a sense of what's the impact of one of these policies. We're going to be looking at the impact of a credit expansion induced by a policy called Help to Buy in the UK. I'm going to be talking about Help to Buy, some of the details of this policy in a few slides, but just to give you a glimpse to begin with, this was housing policy implemented by the UK government from starting in 2013. It is arguably one of the most important housing policies introduced by UK governments since the 80s. It consists mainly, and again, I will talk more about this in a second, but it consists mainly in the availability of an equity loan, which is a loan for households looking to buy new build units. The role of this loan is that it's seen as a complement to other forms of borrowing, for example, mortgage borrowing from commercial lenders. And the loan comes in to try to reduce the down payments that are required from households that are trying to access commercial lending. The loans are only available for the purchase of new build units, which is going to be quite important for our study. And they come in the form of an equity loan, so that the government holds an equity stake on the property after the loan is taken. So if a household takes the loan and then after a year decides to sell the house, it needs to pay the corresponding share of the unit that's owned by the government to the government, and any capital gains on that share of the unit that is still held by the government. There are several effects of interest that we look at in the paper. I'm going to be talking about the first two here. So we're going to be looking at housing prices and construction activity. So we're going to be looking at sort of new building activity and housing prices. In the paper, we also talk a little bit about developer profits. I'm not going to be talking about that so much here, so I'm going to be focusing on the first 2 points there. Some of you might think, okay, this policy might also affect tenure decisions, which of course is one of the intended goals of the policy. We're not going to be looking at that, mainly because of a data problem, so we don't have appropriate time varying data on tenure choice that allows us to answer that question. So the empirical strategy we're going to use, we're going to be exploiting differences in the eligibility of the policy at certain boundaries inside of the UK. Specifically, there's 2 important boundaries that we're going to be exploiting in this paper. There is the boundary between the Greater London area, which is the dark area you see here in the left, in the left figure in your screens. So this area is called the Greater London area. You can see hopefully the River Thames in the middle of that area, and there's a discontinuity in the eligibility criteria for the policy. I will be specific about what that discontinuity consists in a second. There's a discontinuity at the boundary, with the policy being more generous within London than outside London, starting in 2016. And then there's also a discontinuity in the eligibility criteria of the policy at the boundary between England and Wales, and with the English side of the boundary having a more generous version of Help to Buy. Again, I'll be explicit on what I mean with generous in a second. So we're going to be using these boundaries in a difference in boundary discontinuities design. So we're going to be combining cross-sectional differences across the boundary with time series variation to try to ask questions about what's the price effect of the policy and what is the effect on quantities provided in new construction. We're going to be computing reduced form effects. So what I mean with reduced form effects is that we're not going to be, first, it's kind of a methodological statement. We're here, it's going to be a reduced form paper. It's not a structured paper, as Olivier's paper. But also, we're not going to be estimating a specific elasticity. We're going to estimate essentially a level effect of the differences in generosity across the boundary. We still think that these are qualitatively relevant to interpret what is the effect of a policy such as Help to Buy, and that's what we do in the paper. So just to present a preview of results. These are the 2 main results in the paper. In the figure to your left, what you see is a time series graph in which we represent price indices for properties, new build properties sold just inside of the GLA, so within 5 kilometers of the GLA boundary. This is essentially the area in here, so the Greater London area boundary. That's the red line. And then we also present price indices calculated for new build properties just outside of the GLA, so 5 kilometers outside of, in a band of 5 kilometers outside of the Greater London area boundary. And we see that these track each other quite closely from 2010 up until 2016 or 17, and then they start to diverge. The London version of Help to Buy was introduced in 2016, which is when we start seeing this difference in the generosity of the Help to Buy scheme in both sides of the border, and that's what we interpret then this gap in prices appearing after the introduction of this difference in policy being a result of the policy itself. We also look at the Welsh boundary. In the case of the Welsh boundary, as you will see in a few slides, we do not find a difference in prices, but we find a difference in construction activity. So again, in the horizontal axis here, we have time. In the vertical axis, we have the average number of new build transactions taking place in a specific ward, right? A ward, you can think of this as a small spatial unit, right? And we see that after several periods, we see growing an existing gap appearing between these two lines. The blue line here would correspond to the Welsh side of the border, so essentially this side of the border, and the red line would correspond to the English side of the border, so essentially this side of the border, because the Help to Buy policy is more generous in the English side of the border. We interpret this again as being the result of that difference in generosity at the border, inducing more construction on the English side. You can hopefully see that on average, we have a widening gap here. We also report in the paper an improvement of developers' performance for developers that participate in the policy relative to developers that do not participate in the policy. That's done in a difference type setup. So it's a little bit different from the identifying assumptions that we use here. And I'm not going to be talking more about that here. We can talk about it at the end if you want. So in terms of related literature, I'm not going to go over all of these literatures because they're quite long and there's a lot of stuff to cover. But we make contributions to essentially two strands of the literature. First, the enormous literature on credit and housing markets. There's a bunch of different studies over different decades looking at this relationship. The contribution that we make is that because the policy effectively constitutes an increase in credit supply, at least for a segment of the housing market. And relative to this literature, again, we have some advantages in terms of identification, which are induced by the policy itself. There is a literature that some of you might be familiar with on mortgage market policies specifically. I mean, Olivier was talking about this before. The strategy here is novel. We are also going to be looking at effects on output, which is something that sometimes has been overlooked. And again, we are looking at help to buy specifically, which has not been studied extensively before. So let me talk a little bit about the scheme. So what is help to buy? So help to buy was a policy whose stated aim was to help credit and liquidity constrained households, especially first-time buyers, but not exclusively first-time buyers. So anyone can use this policy to purchase a residence, to purchase a home. And also an intended effect of the policy was to stimulate housing construction. It was implemented in 2013 in response to the affordability crisis. So let me give you a little bit of context. In 2008, as you can imagine, 2008, 2009, there was a big housing slump in the UK, as in many other economies, with housing prices decreasing substantially and credit conditions worsening substantially too, in the sense that there was a reduction in the loan to values available to homeowners in this period from roughly 90% to 75%, at least for first-time buyers, right? Which increases the size of the down payments that first-time buyers had to make if they wanted to become homeowners. Now, because initially there was both a reduction in the availability of credit, but a reduction in prices, and there were other economic circumstances that didn't allow lots of people to jump on the housing ladder anyways. There was no policy response in terms of, so help to buy came a little bit later. It came after prices started to recover, but credit conditions recovered much slower. Right? So what happened is that loan to value ratios did not improve substantially, but prices were improving during this period. And therefore, in light of these changes, there was an affordability crisis, or in the media, this was covered as an affordability crisis because prices were rising, but people were still not being able to get enough money to afford the down payment, right? So the government comes up with this policy, which is meant, as I will show in a second, to bridge that gap in funding that people could not make up with their own funds. It is arguably the biggest housing market intervention, or the biggest new housing market intervention in the UK since the right to buy policy of the Thatcher governments in the 80s. And the help to buy policy comes in with different schemes, so with 4 different schemes. So the equity loan scheme, the mortgage guarantee, shared ownership, and ISA scheme. Now, the equity loan scheme, which is the scheme that we're going to be talking about in this paper, really, is by far the largest in terms of budget, and also the most significant of all these other schemes. Most of these other schemes are relatively small in comparison, tiny in comparison with the equity loan scheme. So throughout the paper and in this presentation, I will talk about help to buy and equity loan scheme interchangeably, because these other 3 schemes were largely unimportant, and more importantly, for our purposes, they don't vary in terms of their conditions at the boundaries that we are considering here. So let me explain a little bit the equity loan scheme in more detail. So the English version of the ELS, which was the first version that was introduced in April 2013, provides an equity loan of up to 20% of the purchase price for the purchase of new build property, right? And the idea of this equity loan is that it bridges a funding gap that households face when trying to buy new properties. So imagine that a household is trying to buy an example house of 200,000 pounds. This figure comes from the government brochure that came with the launch of the policy. Imagine a household wants to buy a unit of 200,000 pounds for the sake of the argument. This in London is not much money, but throughout the country it may be a significant amount. If the household gets a 75% LTV mortgage from a commercial lender, right, that means that the household can borrow up to 150,000 pounds. But if that's and that's the only credit that the household can have access to, and this would arguably be the case in the world prior to 2013, or for household buying an existing unit, then the household needs to pay up 50,000 pounds by itself. 50,000 pounds is a large amount of money. It's way above the median household income in the UK, and often much above the household wealth for non-owning households. So this is a significant hurdle for many households trying to buy into this market. The reason why this used not to be a problem is because loan-to-value ratios used to be higher in the world prior to 2008, but then they decreased substantially, and while they have recovered to some degree, they haven't really recovered to the previous levels yet. So in comes the government with the Help to Buy scheme, and the Help to Buy scheme provides a complementary loan of 20% of the value of the property. So it's essentially providing a loan if the property is worth 200,000 pounds, it's providing a loan for 40,000 pounds here, right? And this changes the size of the down payment from 50,000 pounds in this case to 10,000 pounds, which is a significant change. 10,000 pounds, still a significant amount of money for many households, but much more affordable. So it makes it easier to get on the housing ladder for, if we keep prices constant. A couple of things about the policy. The policy was sophisticated enough. So the government was sophisticated enough in its policy design that it introduced the policy only for purchase of new build property. The idea behind this is that the government didn't want to simply increase housing demand across the board, which would presumably just translate into a change in prices, but wanted to promote more purchase of new build property, so wanted to promote new construction. There's also a little bit of an interest rate subsidy, which we will return at the end of the presentation. So there's no interest for the first 5 years of the, so no interest on this part of the loan for the first 5 years. And this can also affect the desirability of accessing these loans by certain households. Okay, so in terms of Help to Buy, in terms of our research design, we're going to be using regional differences in the policy. There are actually four, because Scotland also has a Help to Buy program, but the Scottish Land Registry works differently and we cannot really use it for our purposes. So we're going to be using 3 different regions that have different programs. So you have one program that applies to England. The program was the initial version of Help to Buy. It initially applied both to England and to London, right? So all of England, essentially. It was introduced in April. It could be used for the purchase of properties up to £600,000. It gave a loan from the government of up to 20% of the value of the property. So it's exactly this example I covered here. And it applies only to new builds, which is something that applies across the board. So all regions had the same restriction. The Welsh Help to Buy program was introduced a couple of months later, some months later, almost a year later. It's similar in the sense that it only applies to new build units and provides a loan of up to 20% of the value of the unit, but it can only be used to purchase properties up to £300,000. So we're going to show that this restriction can be binding in practice. So potentially this can be used, be exploited in an empirical analysis. And then finally, in February 2016, we have a new version of Help to Buy that was introduced in London only. So that's in the Greater London area, which again allows to buy properties, new build properties of up to £600,000, as in the case of the English version of Help to Buy, but provides a loan of up to 40% of the value of the unit. The reason why the London version of Help to Buy provides a loan of up to 40% of the value of the unit was that Properties in London are more expensive, and usually with just a 20% of the value of the unit, while households would be able to make the loan-to-value criteria to get, so they would be able to get a mortgage with a 70%, 75% LTV. They wouldn't be able to make the loan-to-income constraint that banks also introduce. So this allowed to get slightly smaller loans from commercial lenders, and therefore make their loan-to-income criteria. Would enable some households to make their loan-to-income criteria and use the policy for purchases. So we're going to use these differences in generosity at these boundaries, at the boundary between these regions, combined with the timing of the different policies, to estimate a reduced form effect of these kind of gaps in generosity on prices and volumes. Now, this policy was somewhat controversial. It continues to be somewhat controversial to this day. So the notion that this policy could induce simply a change in demand with no effect in supply, so essentially just a run-up on prices with no counterpart in terms of quantities, was something that, of course, we thought about, but the UK media, and I think to some degree even the government had thought about before. The UK media, with its ability for flashy headlines, had made this point in several ways earlier, right? So the policy being called reckless, cruel, and so on. It could create a housing bubble. It was a disaster for the young, and so on and so forth. Many of these statements, the notion that this policy could generate some unintended effects is plausible, but we didn't really have an analysis that looked into this in detail, and that's, in some sense, one of the things that the paper comes to do. So in our analysis, everything is going to be reduced form, pretty straightforward. As you'll see, we're going to use a housing transactions data that extends from 2012 to 2018. We're now at this point, and I'm going to show you some results where we extend the sample to 2019. It's something that we're doing this month, but Shaolun is partially on the market, and we're in our teaching term and so on, so we haven't fully incorporated this, but I will show you some elements in which we include one more year here. So what we use is essentially data on the universe of residential transactions in the UK. We're going to be focusing on new builds specifically. We combine this with energy performance certificate data to have housing characteristics, which matter a little bit here because the policy itself could change housing characteristics. We have some results in the paper indicating that it changes a little bit the housing size. So we need to get data on housing size from energy performance certificates to try to adjust for that. We geolocate properties with postcodes so that we can tell which side of the boundary they fall in, basically, and what's the distance to the boundary. We also include some neighborhood characteristics from the 2011 census that are not going to matter much. In the price part of the analysis, I'm going to be focusing on individual properties, but when looking at transaction volumes, we're going to be aggregating things towards. So this is what our sample looks like. In the case of the GLA, we look at areas within 5 kilometers of the boundary. In our main analysis, we do some robustness in the paper. And in the case of the Welsh boundary, we're going to be looking at properties within 10 kilometers of the boundary. The reason why we don't use the same bandwidth in both cases is that this is much more sparsely populated. While it's a much longer boundary, it's much more sparsely populated than the GLA. And so we need to incorporate a wider bandwidth in order to incorporate more observations. We do have robustness. We might be able to talk about those at the end. One important consideration, which is going to matter for the interpretation of results, is that border of Wales and the boundary of the GLA are two very different places, right? So in the border of, in the boundary of the GLA, of the boundary of London, right, we have very constrained land supply. A lot of this area around here is covered by greenbelt, which is land that's designated not to be for development, and much of the land that is not greenbelt is already built up. So there's pretty significant land constraints here. There is new building. I mean, these points that you see here corresponds to new build units. So there is still new building because there's some tear downs and there's also a building on brownfield land. The availability of land is much more constrained than in the areas around Wales, where there's almost no land designated greenbelt, less planning restrictions, and less built up land. And this is going to matter for the interpretation of results before. So let me go to the effect on prices. What we're going to run in our main specification is a difference in boundary discontinuities, which combines boundary discontinuity design with the timing of policy introduction. So we're when we look at price effects, we're going to have the log price regressed on a set of postcode fixed effects in our most stringent specification. This help to buy is going to take value 1 in the period after, so you can think of this as the interactive term in a standard difference in difference design. This is going to take value 1 in the boundary where you have the most generous version of the policy. So this can be the English side of the Welsh boundary, or this can be inside of the Greater London Area boundary. A full set of time effects, some characteristics, the most important ones here are the characteristics of the properties, and a flexible control for distance, in which we include essentially an interaction term between year effects and distance to the boundary. We're going to be estimating this specification within 5 kilometers and 10 kilometers of the boundary. Before I go to those estimates, let me show you some results. This figure for London is what I showed you before, right? So the red line corresponds to the price index calculated for properties inside of the GLA boundary, and the blue line corresponds to a price index calculated for properties just outside the boundary. The more generous version of the policy was introduced after 2016, which is this vertical line inside of the boundary, and we see a price gap showing up. When we turn to Wales, the English version of Help to Buy, which is more generous than the Welsh version of Help to Buy, and that was also introduced a little bit earlier, introduced in 2013, and we observed that there's no significant differences either before or after the introduction of this policy, right? So there's no significant difference in prices on both sides of the boundary. Things are essentially pretty flat. This is normalized to 0 at the beginning of the period, so that's why it starts at 0. What we do in the paper, what we do in the table here can be done separately with 2 cross-sectional analyses as you would in a standard regression discontinuity design. So in this case, we're looking at the London boundary. We can essentially look at how prices would look as you get closer to the border from outside of London, and then from in the inside of London here in the positive values. So positive distance to the GLA corresponds to inside of London, and negative distance to outside of London. You see that initially, before the policy was introduced, we did not observe a significant discontinuity here. After the policy is introduced, we see something of a discontinuity appearing here. You might be wondering, oh, why you have a second-degree polynomial. What happens if you have a first-degree polynomial? Well, things don't change that much, right? So you have essentially a flat line here and a downward sloping line here. So essentially, what's going to drive these estimates that I'm going to show you in one slide is the appearance of this gap here in the post period, so between February 2016 and December 2018. This is what we find. Our preferred specifications are the specifications essentially including housing controls and postcode fixed effects. So if you go to the most stringent specification, which also includes distance by year and census variable by year, we find a price gap. So essentially estimate this price gap to be roughly 6%, right? So 6% higher prices in London after the introduction of the Help to Buy policy at the boundary, right? So that's the effect for London. In the case of Wales, we find an effect of roughly 2%. I'm not going to show you the table in the interest of time, but what you can see here is that before and after the policy, you don't really see much, right? So this is before up to March 2013, and this is essentially after the Help to Buy policy was in place. You can play around a little bit with the time periods here, but things don't change that much, and what you observe is nothing, right? So prices didn't change substantially, so we don't have a gap showing up here, the boundary, either before or after the introduction of the policy and the difference in policy at the boundary. So let me now turn to housing supply effects. I think I have hopefully enough time. So we conduct a similar analysis here, but instead of looking at prices, we look at housing volumes. This has to be carried out a little bit differently because, of course, in the previous analysis, I can use an individual unit as the unit of observation. Here, because I need to calculate essentially the number of new build units or some measure of construction, we need to aggregate up spatially. What we're going to do is we're going to aggregate up to the ward level. We can think of these as small spatial units. And I'm going to compute using the land registry data. We're going to compute the number of new build sales in each ward in each month, right? And then we conduct a very similar analysis. We do take a 1-year lag for the help to buy dummy here. This is again a dummy taking value 1 in the more generous side of the boundary after the policy difference appears, right? We lag this by 1 period because we think that it may take a little bit of time for construction to kick in, which is something that we do observe in the data. We include word fixed effects, we include time fixed effects here, and we include, this should be a J, apologies for that. We include also distance, flexible control for distance there, and we look at what happens. And this is the graph that I showed you before for the Welsh boundary, right? So at the beginning of the presentation, what this shows is that initially there's not much difference between construction activity inside of the boundary and outside of the boundary. This is a little bit jagged because there is so some in certain periods, this is a relatively sparsely populated area. So in certain periods, you have some new developments coming into the market, and in certain periods, you don't have so much action. But essentially, what you see is that after the policy introduction, you start seeing a gap showing up between Wales, the Welsh, and the English side of the boundary. Again, the English side of the boundary is the side where you have the most generous version of the policy. In this case, the generosity means that on the English side of the boundary, you can use help to buy properties of up to £600,000, whereas in the Welsh side of the boundary, you can only use help to buy properties of up to £300,000. I'm going to show you that that is binding if we have time. What I did not show you is the London boundary. So in the London boundary, on the London boundary, we do not observe, after the introduction of the London version of help to buy, we do not observe a significant difference in construction volumes, right? We do not observe that these things diverge. In the initial version of the paper, so if you go over the paper, actually the time period ends in 2019. We've just extended the sample because we were worried about, maybe something appeared later, right? And at least if you extend all the way, if you include 2019, the whole of 2019, you don't observe any difference here. We might include 2020 later. 2020 is a little bit of a special year, so we're thinking about it. But we do not observe, we haven't observed actually the policy kicks in 2016. So in these 4 years, we haven't really observed any differences in housing supply emerging between sides of the boundary in the case of London. So this is the effect on the Welsh border. So the help to buy policy introduces an increase in new build transactions taking place on the Welsh side of the border relative to the English side of in the English side of the border relative to the Welsh side of the border of roughly half a property per month per ward. We have like a bunch of wards here, so this effect is actually not as small as it might seem. So this is just trying to estimate the average effect, where we take the average over all of this period. Okay, so we do a bunch of different robustness checks, and I am not going to stop in detail over all of them because there's a lot of different things here, and I don't want to bore you too much with these things. One concern that I'm sure that several of you may have, especially if you've run this analysis in the past, it's kind of one of the typical concerns that people have, is that there might be a violation of the SUTVA condition here. Because we're using the boundaries here, you might think that the presence of a more generous policy on one side of the boundary might essentially shift demand across the boundary. And if this shifts demand across the boundary, then that's going to lead us to overestimate the effect of the policy at the boundary. Now, what we do to deal with that is we exclude increasing size of, so we essentially exclude units very close to the boundary from the analysis. It's essentially what is sometimes called the donut approach, where you take the boundary itself and you remove units which are very close to the boundary, where presumably the scope for this type of demand shifting could be larger. We do that both in our price analysis and in our quantity analysis, and we do that both for the GLA and the English-Welsh boundary. What you see is that we can exclude up to essentially properties which are up to 2 kilometers from the boundary. This is essentially almost half of our sample. And we see that the price effects stay relatively stable. When you start excluding a little bit more, you see that the effects are a little bit smaller. So they go from roughly 6% to roughly 5%. But still, we see substantial effects here, even excluding properties which are within 2 kilometers, so essentially a band of 4 kilometers around the boundary. When we do that for Wales, in the price effect, we didn't find any significant price effects, and in this case, we don't find significant price effects either. We do the same for quantities, and again, we find that we can exclude significant chunks of bands around the boundary, and we don't find that changes results substantially. As you start removing more and more, in this case, we're removing again half of the size of the boundary, then things, you start having trouble identifying an effect there, but we still see the size of the coefficient doesn't change massively. In the case of London, the coefficients are generally 0, as we showed us before, and the exclusions don't make much of a difference. Now, how do we interpret these findings? Well, so the one way in which we interpret these findings, the different findings from England and Wales, I've hinted on this before, I think I have time. So, what we find essentially in a nutshell is that in the case of the London boundary, we find an increase in price with no effect on supply. In the case of Wales, we have found an increase in supply with no effect on price, right? And this is actually something that's not super surprising if you look at the distribution of Help to Buy properties. So this is the map. This map indicates where Help to Buy properties were purchased. So these different shades of brown there corresponds to different relative frequencies of Help to Buy transactions in different areas. And you see that in London, there's not much action, right? But outside of London, in more peripheral areas, there is a little bit more action, and you see a little bit of action here. Right? And you see action sort of here and here, although not much action here in the south. And one way of interpreting this is that these two areas are very different, right? So in the London side on the London boundary, we have again very constrained supply of land. In the Welsh boundary, we have relatively unconstrained supply of land. So one issue of the policy is that the objective of increasing supply, which is a stated objective of the policy, and it's built into to some degree in its policy design, leads to more home building, presumably, but in already affordable areas, in areas where you have relatively lax supply of land and where maybe the issue of supply was not such an important problem. Whereas in the already unaffordable areas where you have less supply of land, or where supply of land is more constrained, if you will, this can lead to an increase in prices. And we can interpret this with a very simple framework in which we actually sort of formulate this in the paper, but it's an absolute model in which you have variation in the responsiveness of supply, and then an equivalent change in demand would lead to different responses in terms of prices and quantities, right? With more response in quantities where the supply is responsive, and more response in price when supply is unresponsive or steeper in this case, right? So that's what we use to rationalize our findings. Then one last thing I'd like to talk about, also in terms of the interpretation of our findings, relates to the interest subsidy. Right. So as I mentioned at the beginning, the Help to Buy introduces not only it presumably relaxes credit conditions, but it also introduces an interest rate subsidy, because the first 5 years after the purchase, the household doesn't have to pay interest on the Help to Buy mortgage that's taken. So if this mortgage is 20% of the value of the property, the interests on that part of the liability that's taken on by the household can be quite significant, right? So what we do is we try to compute essentially what would be the present discounted value of this interest rate subsidy in the paper. You need to make a couple of assumptions with these things in terms of what's the horizon in which payments are going to be made for the full mortgage, what's going to happen after the household, after the mortgage, the interest rates kick in, and so on. But under what we consider to be relatively reasonable assumptions, we find that at most the interest rate subsidy can only explain a 40% of the estimated effect for London. So at least what this seems to suggest is that the substantial part of the price effect we find in London is driven by credit expansion proper. So it's not driven by this credit supply, by this interest rate subsidy. So, this would point to the substantial effect of credit expansion on prices. In recent referee reports, there's some work that other authors have done on how households repay the Help to Buy mortgages, showing that households often want to repay these Help to Buy mortgages relatively quickly in order to capture possibly increases in capital gains associated with changes in housing prices. And this would actually make this 40% effect even lower. Right? So it could be something like, it depends on the pay, on how much they pay, but it could be around 30% of the estimated effect. So a substantial part, more than half of the effect, but perhaps even much more than half of the effect that we find could be explained by credit expansion and not by the change in interest rates there. Okay, so I think I have a couple more things to mention. So let me mention one more thing. One concern that some of you might have is, if you're more or less acquainted with the UK, you might think that £300,000, the limit in the case of the Welsh boundary, right, in the Welsh Help to Buy, is not a binding limit. Remember that when we're conducting our analysis, we're going to be essentially using differences in the generosity of Help to Buy across this boundary. But if these differences in generosity associated to the maximum borrowing limit don't matter, then we shouldn't find any effect, right? And because we don't find an effect on prices, then that would be the outcome. So what we look at in the paper to try to deal with this concern, and also because the graphs look nice, is we look at essentially bunching of new build property sales around the price limits for Help to Buy. So we look at the Welsh boundary and the English boundary. Here, what we do is we calculate the fraction of new build over total sales for different price points, right? And what we see, so it is essentially the number of new build sales in price bins divided by the number of existing sales. What we see is significant bunching at 30%. So we see this point here, and a large, essentially a cliff here when you cross the £300,000 bound. Again, the £300,000 is the maximum loan to value, maximum property value that you can get for Help to Buy mortgage in Wales. So that seems to indicate that actually the £300,000 limit was indeed binding for some households, as it seems to be the case also for England with its £600,000 limit. So this kind of assails some of the doubts regarding whether this would be binding or not. Which again, because we do find an effect on prices, we're not so worried about, but we wanted, it was comforting to find. Okay, so let me, I think, starting to run out of time, so let me start concluding. So we exploit differences in the intensity or generosity of Help to Buy across regional boundaries to study the effect of credit expansion on housing prices and construction activity. We do find in London a price increase with no change in quantities, and the recent results that include 2019 seem to suggest indeed that there is no change in quantities even moving further into the future. In the case of Wales, we find an increase in supply and no significant change in price. The policy increases demand, but apparently it's only able to increase quantity in affordable areas, right? Which is fine, but then, the part of the affordability problem is usually framed, not only in the media, but experienced in the least affordable area. So, it's not clear that this policy is addressing this sufficiently, at least in terms of stimulating output. It might generate worse affordability conditions in unaffordable areas. We do find, in terms of distributional impact, suggestive evidence that there was an increase in developer profits during this period, and that is how we conclude. And that's all I have to say. Yeah, I think, that's all I have to say for now.
Thank you, Felipe, for sharing with us this very interesting work. So we have a few minutes to take questions. So don't hesitate to raise the hand.
I have maybe a couple of questions.
Yeah.
Go for it, Olivier. Yeah, sure.
Yeah. So like the first one is very, very general. I mean, the UK government has huge stakes in the housing equity now of households. I mean, I cannot even imagine how many billions probably they have invested. Where do they take the money? I mean, how do they finance that? Is just like, are they increasing taxes? Are they contracting debt? Or so I just want to understand, is there some redistribution going on, or I don't know.
I don't think that there was a so I think that the total outlay of the policy was 15 billion, so it's not
Okay.
at the end. So a lot of that would have already been so that's kind of the total at the end. So some of that would already feature money that came back in. I don't think that there were specific taxes levied based on this policy, right? Taxes have gone down to some degree since 2013, a little bit. At least, or that's my impression. Certainly in the last few years since I've been here, right? Not significantly, but you know, the changes in taxes that they have observed have been downward and not upward. It is true that this is also coincides with the period of austerity, so there's cuts in other places, and presumably you could think of these. I mean, money is fiduciary is, you know, so you don't know exactly where the money comes from, but at the same time as this was being done, you do have the austerity policies on the other side, which I don't think that they were introduced to pay for Help to Buy, to be perfectly honest, but still, you know, that would help with the government balance sheet. Maybe I should like put the 15 billion in context. So think about, you know, the government budget and what's the size of that, because without that, it's a little bit, you know, I say 15 billion, but with these big numbers, it's a little bit hard to think.
No, I would have thought much more. I'm surprised that is not more. Okay, but
let me see. I had the quantity up here. Maybe yeah. So I think it's 15 billion. So there were like this is a little bit more, because now this number we need to update it. This is over 300,000 now, right? But still, I don't think that's going to change things substantially, right? So the amounts have not been that large. I mean, you need to think about the fact that these are new build units only, right? And the volume of new transactions of new construction that's being made in the UK is not enormous. And only a fraction of those are bought through Help to Buy mortgages, right? A significant fraction. Don't remember the number now. We have it in the paper.
Is there not an upper limit to the value of the property that the that's the okay.
Yeah, there's 600,000, and in the case of Wales, 300,000. But you can think 300,000. You know, in terms of the government budget, that's going to be the relevant limit.
And maybe the second question that I have, and now I'm really bad to explain that. I don't know, like I'm just trying to think, like, you know, in a defensive setting, you know, I have my control units that are not affected, and I have another region or area that is treated, and I can learn something by comparing the trend. And here, I don't know, it's really difficult, because I have my control units or my area, my units, and at some point, all of them gets treated. And
yeah,
and I'm really struggling. So maybe it's correct. I really have no idea. But the fact that the trend changes for both of them, am I really able to learn something about the impact of the policy?
I mean, I think, okay, so perhaps, you know, perhaps the right way to answer this question is with a fully fledged model, you know, but let me try without that.
Yeah, sure.
Is that presumably, you know, the level part of the policy. So in the policy, what we're exploiting in the paper is these differences in intensity, if you want, right? Mm-hmm. Presumably under hopefully relatively standard conditions. Again, I'm not sure you can like know for sure without a structured model, but I think that this is what I'm going to say is reasonable. The time effect deals with the level effects. So we tend to think, for example, if there is like an aggregate demand shock, right? The time effect would deal with this aggregate demand shock, right? And therefore, if we think of the policy of, say, some baseline Help to Buy being an aggregate demand shock, and then these differences Help to Buy as being changes relative to that aggregate demand shock, then the time effect should deal with that to some degree, right? To some degree, you know, under certain conditions, I'm sure it would completely deal with that. Perhaps there is a way. So if you think of the aggregate shock having having heterogeneous impacts to begin with, right?
Yeah.
And then the time effects, because of these heterogeneous impacts, the time effects wouldn't be able to deal with this shock, with this. So I guess an underlying assumption that we have in the background is that the effect, in the absence of this discontinuity, in the absence of these differences in generosity of the policy at the boundary, the time effect, essentially you would have a uniform effect. Now, because we're estimating effects at the boundary, I think that's kind of reasonable, right? If we were comparing London with something that's really far away from London, of course, the effects of any important shock are going to be very heterogeneous, typically. But because we're looking at the boundary, I think that these areas are kind of comparable. I mean, then you have the problem about demand shifting, of course. That's a different, that's a different animal. But
okay, so basically you're saying, okay, the area that was treated less intensively, it's a kind of control group, and the treated group is the differential in the intensity of the treatment.
What we're exploiting here is this difference in intensity, which is what I mean. Let me say, in our defense, it's what you can exploit, right? Because the policy,
it's very complicated. Yeah, sure.
Otherwise, I mean, this is until the London Help to Buy. So the first time we had a conversation about this was in 2015, right? When I joined, and because I was acquainted with the policy before, and the London Help to Buy wasn't introduced in 2016, and I think that it was, it didn't cross our mind that this was something we could exploit until a couple of years later, right? And we thought that the English Welsh boundary maybe was not enough to write a paper on, but yeah.
Don't underestimate Christian. I think he was already thinking about it. But,
we did have a conversation, but yeah.
Okay,
thanks, Olivier.
Other questions? Yeah, Jean-Sauveur?
Yes, thank you for your presentation. I have a question about the main graph that you show us about time series when you see in London. Yes, the left graph.
Yeah.
You say that according to your results, the policy increased prices in London. But when we look at the time series, and the trend previous before the policy, we can see maybe it's more that it decreased prices at the other part of the boundary. Okay, you see, and I'm not sure that policy increased prices within London, contrary to the other interpretation, which is decrease prices outside London.
Okay, so this is a good point. From the point of view of much of our analysis, we cannot really distinguish between those two, right? So those two, I mean, in terms of the empirical specification is going to be silent about what changes. I guess what matters here is essentially what is the largest, what is the scale of the problem. So say the way in which you could be right is if essentially what happened here was that actually the demand for units inside of London didn't change. What happened is that the demands of units outside of London shifted inside of London, right?
Yes.
Or shifted elsewhere, right? The problem of the first interpretation, if it shifted inside of London, then you sort of need that the London demand increase, right? So if you have a shift of demand outside to demand inside, in principle, then demand inside increases, but possibly, right?
Yes.
Now, we include this donut type approach to try to deal with that to some degree, right? I think that you would always tend to have the way in which your interpretation, the demand inside of London did not change, and it was just a reduction in the demand outside of London, is if what happens is that the demand outside of London shifts, but it shifts elsewhere, right?
Yes.
So it doesn't shift towards London, it shifts to, say, like 30 kilometers, 50 kilometers away from London, right? And in that case, then the demand inside of London should not necessarily increase, right? And the demand outside of London would decrease. The problem with that interpretation, that could explain the result, let's say. But the problem with that interpretation is that I don't know what could have led the demand outside of London to shift elsewhere, right? I see why you might think that the demand outside of London shifts inside of London, and there's where the discussion about this donut approach to try to deal with demand shifting, right? And in that case, what you would have is both changes at the same time, right? So increasing demand inside of London and decreasing demand outside of London, which is something we try to deal in the robustness checks. But thinking about the demand changing and not changing inside of London, but just going elsewhere, I find it hard to. I don't see what could generate that. I would also say that interpreting changes in the slope here might be a little bit difficult, right? So, the point would be that, this slope started to increase and then it went flat, right? Whereas this slope continued to increase. So the argument would require a pretty strong interpretation of those changes in slope, which I don't feel super comfortable with, right? I mean, again, could be, but the underlying assumption here is that this is kind of a relatively good counterfactual for what this would have done in the absence of the help to buy policy. That's what I can say. I mean, at some level it's a valid point, because it is possible. You never know if what changes is actually the treatment group and the control group. You need to assume that the control group is unaffected to be able to interpret the results. But yeah, that's what I would say. I'm not sure that was a very good answer, but
yeah. And in terms of amount of transactions, the total volume of transaction, you see differences?
So total volume of new build transactions, no, right? In London, no. Here, this sort of represents, because if you aggregate on both sides, this sort of represents because the average, so the number of words doesn't change, right? Inside and outside the boundary, the number of spatial units doesn't change. So if you observe a gap, it has to be an increase in the average number of transactions. So that is observed in Wales, right? That is what is kind of represented in this graph, right? So you would have to aggregate a little bit, but that is what you would represent here. Here we don't observe a change. I don't think.
But all transactions, not only new transactions.
Okay, so that's a good question. So we looked at existing sales, and we didn't look at transaction volumes. That's something. Transaction volumes of existing units is not something we looked at. So we looked at prices. We only find like tiny effects of like 0.3% or something like that. Really small, that could be related with some spillover of the policy, but they're so small that we don't want to emphasize them a lot. In terms of transaction volumes of existing homes, what are you thinking? We can look at it, but I'm not sure what would be.
Yeah, yes, it's only a proxy. Yes, we should just.
Yeah, I'm not sure if what we would learn if we observe a difference. Maybe it's worth looking at it just to check, right? And if there is a difference, then think about it. Yeah, it's easy to do, so we might take a look, because because we already have the prices of the existing units. It's just counting.
Yes, in my opinion, you must search for what caused the break in the blue line.
Do you mean this break here?
Yeah.
The breaking trend here. Yeah, this is something we can think about. Yeah, but we haven't received this comment before. I mean, it's true that there is. You see an increasing trend here, and then it sort of goes flat again.
Yeah.
So, and I'm not sure. I mean, you also have Brexit after this period. So, but yeah, something worth thinking about.
Yeah, it's true that the first idea is a displacement effect. But if you don't see that in the volume, you must search for another explanation.
Okay, yeah, we'll think about that. Thank you.
Thank you.
We have time for our last question. No other questions so thank you all for your participation, and we especially thank Olivier and Felipe for their presentations. For French-speaking people, we are resuming the online seminar of economic geography at this December 4th and 15th. And I hope we see you soon. Bye.
Thank you very much.
Thank you.
Thank you all for joining.
Thank you.
Bye.
Bye. Bye.